So I really don't take it personally. If I make 100 phone calls in a day and reach 2 people, and if I have to call somebody 10 times before I get an answer, I don't take it personally at all. They're busy.
Our next guest never gives up, keeps an open mind, and is bright by name and bright by nature. This podcast is essential listening for anyone building a business or seeking to raise assets. I'm Deve, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Jennifer Coffey, who is Chief Executive Officer at Bright Capital Advisors, a firm she founded a decade ago that focuses on capital introductions and placement for a range of alternative asset managers. She started her career in Forex research at Lehman Brothers and worked in hedge funds for many years. Welcome, Jennifer. Thanks for joining me today.
Thank you, Ethan. Great to be here.
Let's start with your background and career journey. Where did you grow up and what did you study?
Sure. I grew up in New York City, in Brooklyn and Manhattan. I went to Trinity College in Hartford, Connecticut, where I studied economics. And right after college, I returned to New York City to go to NYU for graduate school in economics. I started my career as an economist on the foreign exchange desk at Lehman Brothers, as you mentioned. And at Lehman, I worked for sales and trading, generating twice daily research reports about what had happened in economics and politics that would affect the next day's trading, whether that was in the US and Europe or Asia. And I worked for a senior economist who gave me a lot of freedom. I distributed our research, which was actually printed and handed out in those days, to fixed income traders, the foreign exchange sales desk, trading desk, and prop desk. The clients of the FX sales desk were hedge funds and commodity trading advisors. And one of the commodity trading advisors liked my work, met me in person and liked my ideas and hired me to build econometric models for foreign currencies and fixed income and to then put on proprietary trades based on those models. As a 24-year-old, putting trades on for hundreds of millions of dollars was both exhilarating and terrifying at the same time. And ultimately, I decided that that form of investing was not a great fit for me. And I learned about the nascent fund of hedge funds industry and joined the fund of funds group at Donaldson, Lufkin, and Jenrette in 1997 and spent the next 13 years as an allocator.
And I think it was towards the end of that time that we actually met. So we were both working in the role as allocator. So what did you enjoy about being an allocator, perhaps, that you hadn't found as a trader?
Sure. Well, I really enjoyed using my background in economics to do macro investing, balancing what I learned from my economic studies with the realities of financial markets. I found it really exciting. When I switched to an allocator role, shortly after I met you, Ethan, I felt so fortunate to be meeting some of the smartest investors in the world and learning about different markets, securities, and economies. I mean, you imagine being a young associate and getting to meet the likes of Julian Robertson, Stan Druckenmiller, Jim Pallotta, Lee Ainsley, Steve Mandel, Andreas Halverson, and others in person. Because when I became an allocator in 1997, there were only 300 hedge funds in the industry, and most of the portfolio managers were truly extraordinary. I also liked staying involved in portfolio management and asset allocation, just one step removed from the individual securities themselves.
Then talk me through your decision to launch Bright Capital, because that was a little bit of a departure, wasn't it, from the allocator role you'd previously done?
It was a huge departure. Throughout my career as an allocator, I had always been offered jobs to do fundraising, which I always turned my nose up at and never really considered. But after the 2008 financial crisis, I realized that the allocator world and the fund of funds industry was going to change dramatically and probably permanently. I also realized that fundraising was suddenly at a huge premium. And I thought, why don't I give this role that so many people think I'll be good at a try? So I made a career change to become a fundraiser, working for a hedge fund, and then quickly started getting job offers from placement agents. And I realized that as a former allocator who grew up in the alternatives industry, who had invested billions of dollars in hundreds of hedge funds, I had great contact on the hedge fund side. And I also realized that my friends who I had grown up with in the alternatives industry like you, were now decision makers. And I really thought, who could be in a better position than me to be successful as a placement agent? Because I had the contacts on both sides, both the fund managers and the allocators. And I was also really fortunate to have a financial backer who believed in me and gave me working capital so that I could go out on my own and have a bit of runway. And running my own firm has been so gratifying. I still have that same thrill of working with the most intelligent investors, learning about markets all over the world. But in addition to that, I get to help entrepreneurs build their businesses and be an entrepreneur myself. Now, in the first few years, there were ups and downs and a lot of worrying, but I now feel quite established. And while there can still be uncertainty year to year, I have a wonderful group of GPs that I've gotten to work with multiple times and some for multiple years. And a big change for me was that although I did start raising capital for a hedge fund when I first started my firm, I was fortunate to very quickly be referred to and hired by real estate and private equity funds. So I learned new strategies, new terminology, and I had to learn a whole new investor world. And I really had to fight to get the attention of investors who had no idea who I was, often marketing non-US funds that had never marketed in the US before, and therefore had no brand name value whatsoever. It's been a real challenge, which has made my success that much sweeter. And today I spend all of my time on real estate and private equity. I work with firms anywhere from raising fund one to firms that are 30 years old, managing tens of billions of dollars. My work takes me all over the world, and I feel so lucky that my GP clients treat me as members of their team. It's just been, a terrific experience.
It's so impressive. I think one of the things, though, perhaps that we don't appreciate is just how challenging it is to go from being an allocator, being essentially a buyer on the buy side, where people come to you, and then where you're in the placement business, where you have to go out and make those calls and take that rejection and to build that thick skin. What kind of a process was that like for you? And did maybe your experience in trading give you maybe a bit of an edge in that and the ability to go back time and time again to make those connections?
Well, I think an advantage I have is having been on the other side of the table as an allocator, because like you said, I've been the one receiving all of the phone calls with people coming in to meet me. And as an allocator, I'm sure you were the same. I could never return all of the phone calls that I got. Otherwise, I would never get any work done. So I really don't take it personally. If I make 100 phone calls in a day and reach 2 people, and if I have to call somebody 10 times before I get an answer, I don't take it personally at all. They're busy. And when I first started my business, I thought the key to my success would be the allocator relationships that I have and the reputation I had built for myself. I very quickly learned that the key to my success was having high quality GP relationships. It doesn't matter how good a relationship I have with allocators if I don't have a good fund to show them. And in fact, my first real successes raising capital was from high quality institutional investors that I had never called on before who had no idea who I was. So I propose fair deals with the GPs that I work with in the hopes that I'll be their go-to fundraiser in North America for years to come. I work with some of the leading asset management firms in the world. These firms trust me with their brand, and I take that trust really seriously. I absolutely prize my GP relationships. And the quality of the GPs that I've worked with sort of begets success with LPs. And now I'm to the point where I think that LPs know if I'm calling them about an opportunity, it may not be a fit for them, but it's going to be high quality. And this is a tough business. The hit rate is quite low. I know that, I accept that, and I make sure that the GPs that I work with and I are on the same page. I really try to curate the group of investors I approach for my GP clients to give myself any possible edge to increase that low hit rate. And like I said, I spent a long time in the role of the people I'm calling on. I know their phone rings all day. Mine did. So I never get offended. I never take it personally when people don't call me back. I know I'm not the only marketer calling on these larger institutional investors. I stay persistent and keep at it until I have their attention. And then when I have their attention, I really listen to what they're looking for so that I can approach them with appropriate opportunities going forward. And of course, goes without saying, you have to believe in what you're calling about. I work with very high quality GPs that I really believe in, and that's key to having the willpower to keep going and keep calling.
Well, that's really interesting. I'd love to dig in now to a little bit of the marketplace in terms of what you're seeing. It's interesting that you mentioned diversifying your business in terms of different kind of funds, different kinds of GPs was really important to make sure you had something for every climate, essentially. Do you see the appetite for alternatives today as being maybe at its peak? And I'd also like to ask you about ESG issues. How much is that top of mind for the allocators you speak to?
Sure. So these days I'm spending most of my time on real estate. And in real estate specifically, I'd say allocations are going up. And for the largest and most sophisticated institutional investors, they're getting more granular and sophisticated in their approach, willing to, and in fact, seeking out single sector, single country opportunities, really wanting to align themselves with GPs that are specialists in what they do. And as far as ESG, on the GP side, I tend to work mostly with non-US GPs in Europe and Asia. And in general, I find non-US GPs to be more concerned about ESG, both in how they run their own firms and how they select and manage their investments. They often have a dedicated head of ESG or even an ESG team. Outside of the US, I find the focus tends to be more on the environment or the E. And in the US and around the world, the S has gotten more important as well, with an increased focus on inclusion and diversity. From an LP perspective, ESG is now a more integrated part of due diligence. I'd say it's somewhat random which LPs sort of prioritize ESG, but it tends to be more West Coast-based investors, more Canadian investors who have had a stronger commitment to ESG, I think, than other institutional investors in other parts of the country.
And it's interesting, you touched on diversity there, and you having started in a trading environment at the beginning of your career and watched the industry over decades since then. What are your impressions on the level of diversity in the industry? Do you see it as improving?
Well, it surely has improved from when I was on the trading desk at Lehman Brothers in 1993, but I think we have a ways to go. And all I have to do is look at the faces on my Zoom meetings over the past 2 years to know that. My Zooms usually have 4 to 9 white men and me. And although there are more females and people of color in my current role, fundraising, both are still underrepresented. And the underrepresentation, I think, is even more pronounced in my previous roles as an allocator or investor. I try to help with women's confidence, helping them believe they can be successful. I've tried to mentor women younger than me. I've encouraged female friends to start their own businesses. This summer, I'm hiring my first intern, a female college student. People who are in a position to help need to do their part, and I am, so I will.
And speaking of doing your part and people maybe who've worked with you, have there been any key people who've mentored you or key influences as you've moved through your career?
For my career, I'd have to say my parents. My parents divorced very young. I lived with my mom, and I watched her have a successful career on her own and knew I always needed to be able to provide for myself. She worked for a long time at the United Nations and got a pension and did well in real estate over the years. And she also taught me to be comfortable in a variety of different environments with people from all over the world. On the other hand, my father started as an entrepreneur at 24 years old and had several career changes, started and sold a company, a magazine, wrote 30 books, and had freedom doing what he loved and was interested in. And so my father's entrepreneurial experience showed me that you could have both the independence and the self-sufficiency I wanted combined with being your own boss. And for sure, my biggest life influence is my 2 sons. Helping them become the best people they can be has been my best life work, hands down.
Well, that's wonderful. And I have to go back to something you said about your father, 30 books. Can you just give me the sort of general topic or subject matter? That is quite prolific.
Yeah, I'm proud to say he and I together wrote a New York Times business bestseller on the year 2000 problem. But he was in the computer industry, and he wrote everything from textbooks used in computer science classes at universities to books about cyber terror to novels. He was prolific. He carried around a notepad in his pocket all the time, including when he slept, in case one of his brilliant ideas woke him up in the middle of the night and he had to write it down.
Sounds like a modern day Charles Dickens, so quite extraordinary. And just before we go to some final questions, we talked a bit about resilience and the fact that in a placement type role, you will have setbacks and how to cope with them. Have there been any setbacks or challenges in your career that you've learned lessons from?
Yeah. So when I was doing macro investing at the commodity trading advisor after leaving Lehman Brothers, a trade I recommended in short-term interest rates lost $5 million in a few minutes when an unexpectedly strong U.S. jobs report was issued. It triggered a stop loss, the position was exited, and I went to the bathroom and was sick. And I beat myself up, and then ultimately learned that great investors have the confidence to implement well thought out investments and then the ego to learn from mistakes, but move on and let it go. And I really resolved to try to work on that mindset in work and overall in life, and to teach my kids to have that mindset to accept your mistakes, learn from it, and let it go. And really, every supposed setback in my career has led to a better opportunity. The financial crisis of 2008 led to a massive change in the hedge fund industry, which led me to really reflect about what I wanted to do and what role would be valued more highly, and make my career change to fundraising. And then the fund I started my fundraising career with started struggling, and that led me to start my own firm. So you can learn, grow, and benefit from most setbacks. And then the challenge of making a big career change to marketing a startup hedge fund reinforced the many benefits of being a nice person and having responded to all of the marketing calls I had received over the years as an allocator. Because when I started fundraising, I asked people for help for the first time in my career. And I called all of those fundraisers that had called me and asked for help. And I was absolutely blown away by their generosity.
That's great that they were willing to reciprocate like that and willing to help, because that's not always actually given in every industry, but that you must have had some great relationships.
All it takes sometimes is a friendly response. And, marketers aren't always treated that well, especially in the hedge fund industry. So I think just niceness and decency goes a long way.
And is there any other creed or motto that you live by?
Yeah, for sure. Two mottos I live by are never give up, which when I describe the persistence that you need to have to do this job, you can see why that's one that I live by. If you're working hard and doing the right thing day after day, you're likely to be successful, although not always in the ways that you expect. There's an investor I'm about to get for one of my GPs that I reached out to 41 times before they told me they were interested. So it takes a certain sort of steely nature to keep picking up the phone. And the other motto I live by is you never know. It's not always clear where your success and best connections will come from. I've worked with people and had great success that I went to college with that I hadn't seen in years. I've started business relationships after calling on people for a coffee for years. And I've had great success working with people that were random, casual referrals. Take the meeting, take the call. You never know where it will lead, sometimes many years in the future. A creed I live by is that I'm not going to be outworked. I'm just not. And my clients all know that I am hard at work every day. They've entrusted me with their brand, sometimes from several thousand miles away. I take that really seriously. And it's a tough industry where, it can be really rewarding. So it shouldn't be easy, frankly.
That's just so impressive. I'm learning and writing notes as we go along. And my last question is any advice you might have for your younger self, looking back to that, whether you're about to enter the commodities trading floor or you're finishing college. Is there anything that you know now you wish you had known then?
Well, I would tell my younger self to be more confident, that it's okay to say, I don't know, because you're not expected to know too much when you're first starting out in your career. I'd tell my younger self to find a female mentor, someone to really learn from. And one piece of advice I got, which led to increased confidence, was to stop being self-deprecating in business situations. I would introduce myself and describe a failure I experienced alongside each success. And a woman who I've worked with for now it's 18 years, who I'm friends with, she many years ago told me to stop being self-deprecating and that I had nothing to apologize for. And she was right. It was sort of a mindset of, I've done this, but I haven't done that. And I don't need to focus on what I haven't done, only what I have done. And that positive outlook breeds confidence.
Well, those are some excellent words of advice from that mentor of yours, and also for you to pass on here. Well, thank you so much, Jennifer. I'd say Bright Capital, bright by name and bright by nature. You've always exuded such positivity in the industry, and it was such a wonderful thing to reconnect recently. And thank you for coming here and for sharing your insights with us. And your clients are privileged, I think, very, very lucky to work with you. So thanks for sharing everything with us.
Thank you so much, Ethan, for inviting me on your podcast. I really appreciate it.
I'm Deve. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts. This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organizations and affiliations of the host or any guest.